As Bitcoin continues its move to the upside, could we be about to see a retest of those key levels that we've been talking about, 98,000, 100K, and could this then set us up for a strong move into December? Well, we had one of the most bullish catalysts you can imagine, and we'll talk about that in just a minute, as well as some big macro data that could drive this market to new all-time highs. I'm going to break down all of it, as always, in this video, keeping you plugged into what's going on in the market. And by the way, there's been some pretty big stuff going on chain. Guess what? It's all in this video. Hit the like button, hit the subscribe button. Let's get into it. So one of the most bullish signals we had, I guess the one thing that everybody wanted, is the Cramer effect. Jim Cramer officially picked the bottom of this move, announcing that he had gone bearish on Bitcoin. And guess what? We've rallied pretty much every day since, knocking in a 1% gain in the last 24 hours. And well, heading on to a potential $92,000 retest very, very soon. But what is really driving the market? Recession fears now sit at about 50%, but there's actually a bigger narrative. The AI boom is holding everything up. And what's happening? You're seeing mass spending. Take a look at this. This is the 10 largest CapEx spenders of 2025. So basically people spending money on everything that's outside of their operating model. But as a percentage of what they actually have as cash flow, this is an important narrative. If the AI bubble bursts, we're over. The bull market is finished, and well, we're heading into a pretty deep recession. Continue to spend, bring jobs to the market. This could all play out very favorable to a bigger rate cut, the economy booming, and maybe even a bigger stimulus coming from Donald Trump. So what does it actually look like? Well, here is the big number. You can see there's just two companies right now, which is Alibaba and Oracle, that are actually spending more than their operating cash flow model. Generally speaking, with people like Google, Microsoft, Meta, all about 50% is their forward capex of their operating cash flow model. It's a pretty big number. Take Meta example, spending around $70 billion of capex. Well, why is this important? It is stimulating the economy. It puts money into the pockets of those that have got just traditional jobs. Builders, construction workers, even people that manufacture certain elements. These are all going to be hard work, paying jobs that are going to come from this big capex spending money. And this could drive liquidity into the market. Remember, Bitcoin and the entire cryptocurrency space is built on liquidity, pretty much. So as more money comes in, there's federal rate cuts, stimulus coming from Donald Trump, capex spending to keep the jobs market moving. Remember, the last latest jobs report we got was actually decent, 216 versus a prediction of 222. This should support a broader market push. When you look at the Coinbase Premium Index, guess what? Spot demand is starting to decline. At the peaks back in early November, mid-November, we actually saw a declining in the market as the Coinbase Premium Base Income did skyrocket. And again, we are starting to see this come back under control as BTC price starts to push further to the upside. Remember, every day we're breaking down macroeconomics for you guys to keep an eye on. Bitcoin price, fundamentals that's going on, so that, well, you know what's going on in this market. It's never financial advice, and I can't guarantee we're always going to be right. But we're not just going to read some news articles out and tell you that the market's going to be great. We're going to actually get into some core fundamentals. So if you enjoy that kind of thing, hit the subscribe button. If you haven't already, it absolutely helps what we're doing here. So what else we got to look at right now? Well, there has been a change at the macro level for ETFs as well. BlackRock, yet again, for the second day in a row, buying Bitcoin. Just under 480 BTC did head over to that BlackRock iShares Trust. Now, this is very much different to where we've been. The 7-day net outflow is still 5,800, still bearish, but this might be the change. I would always bring your attention though, Solana continues its onslaught. And why? Well, the reality is those staking opportunities that sit within that Solana ETF is big news. And I don't think it's going to be long until we start to see some of the bigger markets get involved. Take a look at what VanEck are doing right now, doubling down on their Ethereum staking. They are staking more Ethereum than we've ever seen before. 12,600 ETH, that's around $38 million were staked today. This probably showcasing, or more importantly, trying to tell investors what this could look like. Now, the yield on Ethereum isn't anywhere near Solana. It's about 2.5%. Solana being around 7%, but still, what this is going to do is lock Wall Street money into the crypto market. And once you're here, well, it's only a matter of time before you start looking at custodying your own cryptocurrency or telling everybody else about it. Mass adoption drives liquidity. Remember, liquidity drives the market. And what's also important, guess what? We have seen exchanges and treasury companies buying big. As this price starts to push up, as people begin to feel a little bit more optimistic about this market, Wintermute buying around 8,500 BTC with Coinbase, BitMEX, Binance, Bitwise, Bitfinex, all buying substantial amounts of Bitcoin, the most being Wintermute, $844 million over the course of the last 24 hours. That's a pretty big number. And then when you look at what's going on with crypto exchanges, we are seeing a depletion, a net outflow of around 3,950 Bitcoin exiting exchanges. Yet again, we are seeing the fact that Bitcoin is leaving exchanges and the price is rallying. These two things are directly correlated. When we've seen this before, prices have rallied. And ask yourself the question, why? When you look at the cost-based comparison, well, new whales are dumping. But while ever new whales dumping, these are people that generally got in reasonably early between sort of November the 22nd and now. Well, because they are dumping the bags, the long-term holders, these are people that have had Bitcoin of a substantial amount for over 155 days, are buying the dip, according to miners and including Binance users as well. So these kind of new rotation of capital may even be setting us up for that strong move into December, as many people believe. But there is one big thing, December the 10th, that I'm sure you're aware of that is coming. Well, what can we expect? We know that there's a 25 basis points cut probably going to come in. But how does the sentiment feel at the Federal Reserve? We'll take a look at this. 7 members right now must vote to agree the December rate cut. And if you look, green being dovish, orange being neutral, and red being hawkish, how do we feel right now? Well, you got Michael S. Barr. He looks like he's going to go dovish. You've also got Philip N. Jefferson, who also feels a little bit more dovish, with Stephen Mirren, Christopher Waller, and Austin Goolsbee all seemingly going bullish. And the point here, we only therefore need 2 more. Who is it going to be? Well, we've got Schmidt, Mussalam, and Collins are all probably going to say no, they don't believe we should be seeing rate cuts. Then it falls to Lisa Cook, probably not going to vote Trump's favor. Then you get into John C. Williams and Jerome Powell. Jerome Powell speaking next week on Tuesday. So we may get an indication from him as to where the market's going to go. But it's only going to take a few to tip this to the side. Now, imagine 2 or 3 start to look at it. Let's say we get a good jobs report next week. We actually might see these tip more bullish or certainly more dovish towards a rate cut. Maybe even, as I've been talking, a double rate cut. And I know lots of people think I'm crazy, but when you look at the actual number right now, sitting just under that 87% mark, well, it wouldn't surprise me one bit. Boosted the economy, drive liquidity in, the S&P 500 keeps rallying, Trump's happy, US citizens are happy, and well, if you're involved in cryptocurrency, you should be happy as well. So let me know what you think of all of this, and let me know, do you think it's a 25 basis points, or could we see 50 basis points at the December 10th FOMC meeting? Let me know. As always, thanks so much for watching. Hit the like and subscribe button for more. I'll see you next time. Bye-bye.